Hello investor, how are you? The Hong Kong Hang Seng Index has continued to rebound from 17,000 points since my last blog post on 11th November to now over 21,000 points. Up about 25% in 2 months, 40% in 2.5 months. To whom didn't read my articles continuously in the past 1.5 years, might contribute the continuous rebound of Hong Kong stock market to the abolishment of China's zero-COVID policy and domestic consumption stimulus. No doubt, these are all favorable policies that will have positive impact on Chinese economy. But what all this really affects is the real economy. My article on 28th October 2022 states very clearly that the word finance was not mentioned in the report of the 20th National Congress of the Communist Party of China for the very first time. So there will be no major national policies that will benefit the financial market in the next 5 years. Thus, all policies must be accurately delivered to benefit the economy and not to generate too much liquidity. This will not benefit the equities market there. In fact, China's stock market has no direct impact on the domestic economy, which is completely different from the United States and the Western countries. The US stock market has a direct impact on the economy because they are related to the national pension funds, corporate financing capabilities, and national wealth, which directly affect consumer spendings, domestic investment. So Western countries generally tend to introduce policies that are benefit to the financial market. This is the core value of capitalism. China, as a socialist country, is a total opposite. The National Pension Fund has nothing to do with the stock market and financial market. Private companies borrow money from the banks, not from the stock market. The banks is directly controlled by the government. That means everything is according to the policies. The stock market will not affect people's life. So the rules of the game are totally different. In fact, with Chinese economy reconnecting with the world and the prosperity of all industries, the funds in economy are quite intense and will get even worse in this year. Therefore, domestic capitals will not have a lasting impact for Hong Kong stocks or China's stock market. Now that the stock market continues to rise, where does the source of funds come from? I have said this more than 20 times in the past. Hong Kong stock market relies on overseas funds since the very beginning. Bull or bear is controlled or determined by the foreign capitals. Whether there are favored economic policies or not, good or bad economy in China is nothing to do with the stock market performance. What matters the most is whether foreign funds come in or go away from Hong Kong stock market. For example, Chinese economy is bad and there is lack of direct stimulus policy in 2020. However, foreign capital continues to flow in and create a bull market. Hang Seng Index soared from 22,000 to 31,000, up about 40% in 10 months. Another example, Chinese economy grew more than 6% every year from 2008 to 2016. There are a lot of stimulus policies for the Chinese economy. However, stock plunged 50 to 60% in these 8 years. The reason behind is stock market in Hong Kong is driven by foreign capitals. This is the key and the main reasons for the main trend up and down. The inflow and outflow of foreign capitals has always been based on the strength of the US dollar. It's very clear just looking at the past 12 months. The US dollar hits its peak 113 in October and then fell back to 102 at the second week of 2023. Hong Kong stocks hit the bottom 14,800 in October and then climbed back up to the recent high, which is close to 22,000 points in the second week of 2023. The dollar has weakened, and the investors are looking for investment opportunities in emerging markets. This has never changed in the past 2 to 3 decades. In the MSCI emerging market, Hong Kong Chinese stock composed of 33%. This explains why. As I said last year, when the US dollar hit around 113 in October, the uptick cycle should not done. However, it will only be possible to reach its new high in 2023, not in 2022, as US dollar was overbought, which shown by almost every indicators. If the US dollar bull market cycle has not completed, what should we expect for Hong Kong stock market in 2023? Let's discuss this in my next video. See you next time.